Welcome everyone, this is PSK. This is another version of Sunday Scoop. Today is Sunday, January 23rd, 2022. And I do apologize for my voice, fighting a little bit of a cold. So I'll try to make this short so you don't have to bear with it too long. Video disclaimer, this is for educational informational purposes only. This is not any recommendations, buy or sell any securities. Please do your own due diligence, your own research. All right, so let's jump into it. So obviously, if you're an active trader, you've been paying attention to the markets. No surprise from last week, saw heavy selling to the downside. Indexes breaking down, tech names getting just completely hammered. You have IPO names making new all-time lows, even ones that were up in, say, 2020, 2021, making new lows. But one thing I wanted to start off with is just, a lot of times I've been seeing people talk about capitulation or panic or a bottom. For me personally, one of the things I like to look for when you're trying to see, did we see some capitulation? Did the market kind of puke out? Do we have kind of a relief bounce or maybe a short-term bounce coming? For me, there's a couple things I look for. One is you like to see an elevated VIX. Okay, or VXN, depending on if you're looking at SPY or the NASDAQ. Number two, you want to see elevated volume. You want to see big, heavy, thick volume, 2, 3, 4 times that daily average. And then three, you want to see an elevated put to call ratio. Number four, you could say you want to see sentiment be really extreme bearish or extreme greed, depending on, if you're looking for a top or a bottom. But those four things, it's kind of a checklist. To me, it's never just one specific thing. But if you have all of those things aligned between VIX, volume, sentiment, you have everything kind of wash out, elevated put to call, those are when all of those things are extremes or hitting highs. That's a good sign that you've seen some bottoming or you've seen some washout, you've seen a puke or capitulation, whatever you want to call it, in the market. And I'll talk about that a little bit on the charts. So this week, a monster week of earnings, really kicking off the kind of the tech side, the mega caps. We get into it. We have Microsoft on Tuesday after the bell. We have Boeing Wednesday morning, Tesla, Intel, LRCX, ServiceNow after the bell on Wednesday. We got Apple on Thursday after the bell, Visa, MasterCard, McDonald's. Obviously you got the mega cap names that everybody's paying attention to. Netflix just got absolutely clobbered on Thursday night with their guidance. But it's looking like risk off on these earnings, especially tech. So even if they're anything in line with earnings and they don't come in with some massive upside surprise, I wouldn't be surprised if all these names are down after earnings. I'm not saying like Netflix where it's 4 or 5 times the implied move. But I think Tesla's going to be one of those names that could see huge fireworks. If this is a true risk off market, and Tesla puts up a decent number or even, a slight miss or weak guidance, Tesla could be a Netflix where it just gets absolutely smoked after hours, and it doesn't matter how good the numbers could look. It's just something to be mindful of, and it doesn't necessarily mean that you want to be aggressive in buying dips or anything like that. But I think we're in for some extreme volatility in this earnings. Normally, personally, I like to play iron condors, sell some premium. Normally, stocks stay within a specific implied move. It's a good way to capture all that implied volatility, collect some premium on the option side. But honestly, a straddle might be the way to go on some of these earnings if you like to play earnings where you're basically playing something at the money, and you're looking for a big volatile move up or down, and it doesn't matter which way it goes. It should pay well. I mean, it's just one of those things I'm going to consider or look at on some of these big implied moves. Think of something like Tesla. As far as IPOs, short list, only a couple new ones expected, have a few lockup expirations. There is a metaverse conference this week with Facebook and a gaming summit. I'm sure that the merger with Microsoft and Activision Blizzard is going to be something that'll be talked about, and what any kind of future M&A deals could look like. Some names maybe get floated around this week, so I wouldn't be surprised to see some of those headlines. As far as the macro calendar goes, not only do we have that big earnings list, but now we throw in an FOMC into this week. We also have PMI on Monday, and then we have the core PCE on Friday. So just a massive week macro-wise. You have earnings, you have FOMC, which is the Fed is expected to announce their first rate hike since 2018. Coming out of the pandemic, this would be the first rate hike. So I think Wednesday is going to be huge. And, I'll talk about one of the reasons why I think we could see a little bounce into the FOMC. But, after Wednesday could be a whole nother direction or a whole nother move coming for the market on top of what we've already seen. As far as ETF performance goes, there was not a lot of green on the week. There wasn't anywhere you could really hide in the market as far as on the long side. A lot of names just got absolutely wrecked. ETFs, look at some of these are down 7-8%. The ITB was down 11%. Some of these home builders that had made really big runs offered some really nice short opportunities. Home Depot, Lowe's, those type names. Just seeing some final profit taking. Even Costco, a name that's been red hot, saw some profit taking. So, the Qs were down almost 7%. The SPY down almost 6%. The Dow down over 5%. The IWM broke a long-term support that had been holding for months. Even all the small caps, mid caps, all got smoked to the downside. So not a lot of places to hide. One of the sectors I am watching for a bounce a little bit here, and this is what I was talking about in the beginning of the video when you talk about volume, when you talk about kind of a puke capitulation, is the SMH. The semis still continue to be a red hot sector as far as leadership goes on the tech side. It's coming back into the 200-day, also trend support and technical support on the chart. So big volume day on Friday, actually the largest volume day within the last 2+ years. So again, a little sign of just puke capitulation into a major support area. Again, just kind of a relief type bounce, 1 day bounce. Not looking for anything more, not looking for reversal, not looking for anything till we get past Wednesday in that FOMC. Like I talked about with Tesla, with fireworks. Tesla really was weak on Friday, continued to fade almost all the way into the close, straight from the opening. They report Wednesday after a bell. If this thing gets hit hard and it's risk off, the 200-day is probably not even safe on this name type move that you could see to the downside if it comes. Another name I'm watching for a dead cat bounce here is going to be Shop. Again, look at the volume day on Friday. That's what I'm looking for when it comes to some of these bounces, is things that have been heavily oversold or just really extensive to the downside coming into a support area that had big, massive kind of puke volume on Friday. Not to mention historically the RSI, where it's at a 20, into support with the big volume. Again, just if it can hold the lows Monday or even Tuesday, it could be worth a bounce. I'm not saying it's going to bounce, not saying it even has to bounce, but it's a name I'm watching where, if the market does see a bounce, you could get 100+ points. One I'm watching for continuation to the downside this week is going to be ANET. The name is breaking that post-earnings gap support. It's made new lows on Friday. It is back into the 100 EMA. So if the market does bounce, I wouldn't be surprised if this name does bounce, but all I'd be looking for is a bear flag on the daily for the next leg down. I wouldn't be surprised if this name fills this gap this week all the way back to that earnings where it broke out, in the 103 range. So that's one I'm watching to the downside. And let's jump into some of the charts. So as far as the S&P goes, we finally broke the uptrend support channel we've been in for over a year and a half, roughly. This started in Q4 of 2020. and we've just been riding in this channel to the upside. S&P futures finally broke it this week, and we actually closed below the 200-day, which is a bearish sign on the market when you lose the 200-day on the indexes. As far as the NASDAQ goes, it lost the 200-day a couple days ago. But again, we broke that long-term channel support to the upside. We had tested it a week ago, held, finally broke, and closed below. It actually had 2 days below the 200-day. So nothing good happens below the 200-day, right? When you have all the indexes breaking below the 200-day, that has got to be a sign for institutions to take risk off. Not to mention the Fed, inflation, rising yields, go through the checklist. But again, another big volume day on Friday for the indexes. You can see that heavy volume day. Not necessarily what I would consider a capitulation type volume. I would actually like to see it even higher, but still relatively nice thick volume. And you can see it was thick all week as far as the selling goes. So the fact that we had the extra side to the selling on Friday, again, just sets up for kind of a bounce. Not to mention we had the VIX get up near 30 and before it pulled back a little bit. Any kind of rollover here on the VIX below 30 to start to pull back sub 25 would be a good indication that the market's going to catch a little bounce. But I think one of the things that, and I talked about this I think last Sunday Scoop, is the fact that the VIX never really has shown any panic, in my opinion. Even though it's up above 25 and getting close to 30, that didn't happen until Friday. This selling has been going on, especially in the NASDAQ, for a couple weeks. So this isn't like the market is in mass panic fear mode. It's like the market understands and thinks we should sell off. You're not seeing people get hedged. They're not getting panicked. They're selling. So, to me, that was kind of notable. Excuse me. One thing to watch, and a lot of people talking about gold. Gold is still getting rejected on the kind of that trend line. We'll see if it can break out and make to the highs. Excuse me. All right, so another name I'm kind of watching for a dead cat bounce is going to be Amazon. Just like Shop, one of those names that's broke down, heavy selling. Look at this sell volume on Friday. It's the biggest sell volume, not earnings related. So again, one of those names that could dead cat bounce 100 points back towards the resistance before it gets rejected again. I think I'm gonna have to wrap it up here soon. Throat is not gonna make it. But a couple other names to watch are going to be just some of these semi names, NVIDIA, AMD, see if these do catch any kind of bounce. If not, and we do see some sort of failure, these could definitely still continue to unwind. They've been the leaders to the upside. They have been leading to the downside. So continue to watch those names for more downside. But I think one of the things that kind of stuck out and where it was obvious that the market was in risk off mode was these banks. Banks reported earnings first, and they've just been every single day, next leg down, next leg down, next leg down. This is supposed to be a great environment for banks. You have the Fed with pretty much low rates right now, but rising yields in an inflationary background. Okay, this is where banks are supposed to be able to make money. And people, funds, institutions, whatever, don't even want to own the banks. They're selling. So to me, that was just a major red flag that they did not come in and buy the banks after earnings, especially when some of the earnings have been good. You think about something like Morgan Stanley or even Wells Fargo had good earnings. JP Morgan was just a little light on their guidance, or a little, I would say, cautious on their guidance. But the stock has just been selling off, and banks have been just selling off. So this was another red flag. It was an indicator to me that the market was in a risk-off mode, on top of all this selling you saw in tech. But when banks, when you have value kind of names not even being able to hold up on top of high growth risk-off, that's a major red flag in the market. So I think if you're going to continue to be an active trader, day trader in this market, there's no signs of this selling or this risk off mode changing yet. We'll see what happens after Wednesday, after the Fed announcement. But for me, I'm still treating every kind of short-term bounce, relief rally, whatever, as just kind of the next bear flag or the next resistance, watching the next resistance levels for the next leg down. Another thing to keep an eye on, and what I was talking about this a week ago as well, is Bitcoin. This has been, in my opinion, an indicator for high growth or risk appetite. And if this is selling off, that tells me that high growth or anything kind of risky on the valuation side is going to continue to see outflows or continue to get hit. So like I said earlier, you have some of these IPOs, Coin being an example, even though this isn't really an IPO, it's a direct listing, but it's a newer traded stock, is making new lows, right? This is risk off. They do not want to own this name. AI is a name that just continues to make new lows. Even some of these hot names like Doxin, which was just a red hot stock in 2021 and 2020, end of 2021 into into the kind of fourth quarter in 2021, where the stock doubled pretty much after every earnings. This name just continued to get hit and continues to see more downside. RBLX, another name just unwinding. AFRM, another name just unwinding from the highs. Unity Software, next leg down, right? UPST, all these high growth names have just continued to fill all their gaps to the downside and just continue to keep making next leg down. So there's no idea of how low these are going to go. These could just keep going and going and going down, and as long as there's risk off in the market. So any kind of bounces on these, until we start seeing days, weeks, months of basing or reclaiming levels to the upside, these are still just not interested on the long side, in my opinion. Even Netflix. Netflix is one I would keep on watch, where maybe it could bounce for kind of a day or two, maybe start to fill some of the gap and then roll back over. Great example of this is Humana, where it does one of these, where it just kind of sees maybe a 2-3 day bounce and then makes that next leg over. Docu doing the same thing, right? Where you get kind of this 2-3 day bounce, you get a little bit of relief bounce, some rotation, and then eventually just all the EMAs catch up, makes that next leg down. So if there's any advice I could give you on the market, it would be to stop trying to predict the bottom, stop trying to predict the turn, the reversals. Roku's another great example of that. Just if you're going to be an active trader in this market, you need to trade what you see. Trade what the chart is telling you. Not what you think, not what you expect, not what you hope. Trade what you see. And to me, this is just a great example on Friday for me was Amazon and Tesla. If you look at these on, say, like a 10-minute chart, these were very clearly weak early, right? To me, these were great short opportunities in the morning. It was something I was focused on real early, was watching for any kind of failure off of any kind of pop at the open to see if we'd see more selling. And although some names went red to green, to me, Tesla and Amazon were the first ones that failed to go green and went red immediately or broke the previous day lows or the after hour lows real early. So these were red flags of relative weakness early on, and they offered some really nice short opportunities in the morning. And then you got kind of a little bit of an extension bounce only to just continue to fade off all day. And then once they broke these mid-morning lows, they offered another great fade into the close. So Amazon was a really nice fade into the close. Tesla offered a nice fade in the close, and Google was another one. I even posted this one on Twitter, that if it broke that 2640, which was kind of that morning low, and that pre-market low that it was going to, it had room all the way to 2,600 based on the daily chart. This is another great example of a stock that's just broke the 200-day, has been on a massive run. And, you know, regardless of this earnings, when it comes up here, first day of February, where this one could unwind, it could see more downside regardless of the numbers they put up or their guidance. You know, where if it's truly risk off on tech on a stock that's been on a almost 2-year run, this could see more downside as long as it stays below the 200-day. So that's all I've got for the week. It is a massive week as far as macro data, headlines, FOMC, earnings, everything goes. So one of the things I'm really going to be paying attention to is how the market trades Thursday, Friday, post FOMC, and then also how these big mega caps trade post earnings, you know, regardless of what the numbers are. You know, Microsoft, Apple, Google, Amazon, do they come in and buy the dips on those names, or are 3 day bounces, if they gap down, just sold back off, just like Humana, Docu, all those other names, and they just continue to make the next leg down? So I think that's going to be very critical into Q1, and we'll see what happens. You know, the Fed is going to determine a lot of what the market does after Wednesday afternoon. So hope you guys have a great week. Hope the video helps. Please leave comments, like buttons if you enjoy the video, and if you have any ideas for future videos. Always appreciate your insight. So